Do you still feel confused when it comes to picking stocks? Do you don't know where to begin with? Don't worry, I too was in the same boat some time ago, and everyone begins somewhere. But in this video, I'm gonna teach you the safest and proven method to get up to 20% return on stocks. Okay, so let's start this journey today. And so, what are we going to cover in this video? To make it easy, I have categorized this video into two sections. One is for people who are complete beginners, who have never invested, are completely worried, they don't know where to begin with, and they want a safest and proven method to invest stocks. So that would be covered in the section one, which is for the first timers. And then we have a second section which is for people who are a bit level up than the current level, and these are generally okay. So here comes the interesting part, the first section, and it's for the people who are completely new to investing, who know nothing about stocks, and they do not know where to put in their hard-earned money. And you need to have some understanding of the safest uh, businesses available in the market so that you can invest your hard-earned money. And what else could be better than a stable, an old established big business, well known among people. They have constant flow of money, and they have already established trust with their customers. So if customers have established trust with them, why don't we trust our money with them? So you can trust these big known corporations, and I'm going to name some of them to start with. So let's begin with some common names, very common household names that you would find. And one of them is Google. Who doesn't know about Google? Microsoft, Walmart, Costco, Apple, Toyota, Delta. If you talk about food products, McDonald's, we have been seeing them since childhood. TCS, a very known established IT consultancy company. You can never go wrong with these companies if you don't know anything about investing. You can start small by investing $100 a month or a week, and you can do this for 2-3 months, and your money would be safe and would give you a lot of exposure into the stock market to begin with. So you can be rest assured these companies are really stable, established companies. They can give you a good beginning exposure without exposing you to any sort of risk. And I think it's the safest bet for anyone who doesn't know where to begin with. And yeah, so in coming chapter, we're going to talk about little bit more about the advanced techniques that you can apply. But these are the easiest strategies you can follow if you don't know anything about stock market. Just go with the established safe companies and you're safe and can build your confidence. Okay, so now let's move on to the next level. And at this point, it's been around 6 months for you in the investing in the established companies, and you have gained confidence over time. You feel like you're ready to flex your investing muscle. So you want to pick your own companies. But the question is, what's your criteria to pick the stocks? And this is where we started it. Now we are gonna go a bit deeper, and to be able to pick your stocks yourself, you need to have some criteria for yourself. You need to ask yourself some valid questions, how I'm going to choose. And to give yourself the valid questions, you need to give your thinking a structured way of making a choice. We call it a decision making model. And this decision making model will help you to answer your questions, how to begin with selection, which stocks to choose, with not what not to choose. So let's have a look at them. Okay, so let's talk about our one of the first criteria, which is the present value. So in this video, we will talk about three parameters. One is the present, past, and future. But in this section, we are just going to have an introduction to the present criteria. So in the present criteria, we want to know what is the fair value of the stock. Is this overpriced or underpriced? And it's a really, really important and valid question to be asked, because the core objective is to buy the things or stocks at a fair and a discounted value and selling them at a higher value. But to make a profit by selling at a higher value, things should be priced fairly or discounted. And this is what you need to be able to identify if you are buying the things at a fair price or overpriced one. So this is just an introduction to this now, and in the coming slide, I'll show you what are the sources you can use to get that information, and we will take an example to understand what is the fair value, or if you're buying the stock at a higher value. So let's talk about the another important criteria, which is the past performance of the company. So we already talked about the present parameters, but now when we talk about the past parameters, we need to know how the company has performed in the past, um, because the past performance of the company gives us an indication how consistent the performance has been. If the company has been constantly growing year by year, with the growth rate of, let's say, 5, 10, 15%, that's a good indication that it's consistent in its growth, and we can expect the similar growth in the future or less, but it's a good indication for the stability and consistency of a company. And the third most criteria that I would like you to consider is the future value. So as of now, we have discussed about past and present, which gives us an indication of consistency. And using these numbers, we can have a fair estimation of how much we can expect for our growth rates, or how much our investments or stock portfolios are going to grow. So yeah, using past and present, we can make some prediction about the future. It also depends on how the future of the domain, the stock you have chosen, is going to be. If you're talking about IT industry or any of the software industry, you can fairly assume that the IT is gonna grow in the future. So it is having a positive ecosystem for its uh, stocks or products to grow, and we can expect companies to have a good amount of profits and revenues. But yeah, in this case, we are gonna use estimated values to determine how much profit or returns you can expect for yourself in a conservative way when it comes to the valuations you do for yourself. So in the coming slide, what I'm going to do is I'm going to pick one stock as an example and run these scenarios we discussed, and then we will see what numbers play out for us. Okay, so let's talk about our real life example here for all the criteria we just discussed in the earlier sections. And one of them was the present value. In present valuation, we want to know if the stock is underpriced or overpriced. And to identify this number, I usually like to follow a source called Trefis. So I have given a link for your reference here, in which if you visit this link, you can enter the stock ticker of your choice, and it will tell you if this stock is overpriced or underpriced. So in this case, I'm taking Costco, a very well-known warehouse store, for your reference. And if you look at the stock valuation or the stock price, it's $982 approximately. But if you look at the numbers and calculations, it tells the stock is fairly should be fairly priced at around $878, which makes it a bit expensive. But if you look at the other tech evaluations, the stocks are really, really too expensive. So this, a website or other any other website you want to follow gives you a reference if the stock is overly expensive or not. And the problem is to avoid the stocks which are too expensive and or which are fairly not estimated to a value that anyone can buy, and the downside is it can go down in the future. So for your reference here, the Costco stock here is a bit expensive but not too expensive that you could have a lot of downsides, and this could be one of the factors for you to make a choice whether you want to go with this stock or not. Okay, so after estimating whether the stock is undervalued or overvalued, now let's look at how has been the past performance for the Costco stock. So when you want to know how the company has performed in the past, you want to look at their critical parameters. One is the revenue, the profit, earnings per share. So there could be a lot of other parameters, but generally these could give you broad understanding how the company is doing. And you can get this information from Traface or any other stock website you want to follow. And in this reference, in this screenshot, what I just want to explain is, if you notice the screen here, the Costco stock has been consistently growing their revenue from 2020 to 2023, and you can also see the net income is increasing. So this is a fairly good understanding of how the company has been doing in the past and how their current financial situation is, and using whether the stock is overvalued and undervalued and how their past performance has been, we can make some safer assumption and estimates how much profits you can expect or growth in the coming days. Okay, so here comes the most interesting part, which is of utmost importance for us because we want to know the estimate value of growth of our portfolio or stocks we choose, or how much you can expect to get as a return. So if you look at the screen here, I'm showing you how much the Costco stock has grown for 5 years from 2019 to 2024. And if you look at the numbers, they change every year. Some year it has been the stock has grown 46%. In some year it has been 33. On one particular occasion it was negative, I think after COVID, but overall it has been consistently positive. And if you look at all these numbers, I can safely assume or expect the 20% as the minimum growth that you can expect based on these numbers that you see on the screen. Although the past is not a guarantee for the future, but this is how we can make a safe assumptions for ourselves. So in this calculations, I'm assuming a minimum of 20% of growth, and I'm running three scenarios here in which how much would be your portfolio value if you were to invest $1,000, $10,000, and $100,000, and how much would be your return if you were to keep it invested for a year or 5 years. And you can see the different numbers for different investment values, and you can see it's very safe to assume that the more you invest, the bigger would be your absolute value as a return. But this is how you make numbers, you run the numbers, and you make up a target for yourself, and then you choose your stocks. Or you can do the vice versa as well, that you choose the stock and then expect a certain numbers. We hope you really liked our video, and just stay tuned because we are working on releasing an entire series on stock series investing. And please comment and share if it really helped you to select a stock of your choice. Please like, comment, and subscribe.